Welcome back. If you live here in Milwaukee or in the surrounding suburbs, regardless if you own a home or if you're currently renting, you probably want to know what's going on here in our local real estate market. And this is what my monthly market update is all about. Today I want to talk about inventory, which notably has taken a sharp turn up, a lot more inventory, what that means for buyers and sellers. Then I want to take a look at the economy because we are seeing a gradual shift in multiple categories. So things are coming, things are in the works, what that means for real estate and also for the interest rates that you're paying and what the timing of that could be. Big topic for today. And then, of course, next week we are hosting the RNC here in Milwaukee. We have election coming up in November, and a lot of people are asking me, how is the election cycle going to impact the real estate market? We're taking a look at the data from past elections, so you have a level-headed understanding of what to expect. If you're not familiar with me, my name is Marcus Auerbach. I'm a local real estate agent with a kick-ass team with Keller Williams here in the Milwaukee area. And with that, let's take a look at the latest numbers from the MLS. Inventory, as I mentioned, is up quite a bit, plus 35%. Over 3,300 units. So we're coming from like 2,000 units. If you have been looking for a house and you see all of a sudden, that much more, it's more than 50% increase over what we have seen a few months ago. That's a very welcome change. But of course, below I have historic numbers. Before COVID, June 2019, we had almost twice this amount of inventory. So just to put that a little bit in perspective, market still very, very tight. We have not had enough inventory to satisfy the demand. That is really limiting the amount of transactions. It's a very sparse market, only 2,000 units sold, again down from last year. And normally we would expect about 3,200 units being sold in a month like this. That's not happening. It's just very frustrating for a lot of people. Days on market, velocity, basically as fast as it possibly can go. A lot of houses still selling over list price, multiple offers, and of course on the first weekend. So that gives us the 5 days on market. And prices are up again. New record number here, 355,000 is now the median home price here in the Greater Milwaukee area. That's up 6.6% over last year. We had an extremely strong peak last year in June. So year over year, I think we're going to see a little bit of a higher number here, but currently 6.6. Market trends, as I mentioned, June was probably the peak already for this year. So this is our normal seasonal pattern that we see every year. Things are going to stabilize out a little bit more in July. I have seen that already over the last week or two. Buyers have slightly more choices. So of course, that is a very welcome change to the 2,000 inventory environment that we were used to. And so there's more choices now, but it's still a very, very tight market. And a lot of listings are still going very competitive. But nonetheless, more inventory, we needed it and we take it. All right, let's take a closer look at inventory. You can see it here visually, how sharp it is trending up. And I think we are seeing this trend to continue also in July. When I talk to my service provider, to my stagers, photographers, they're all really booked out for July. I'm sensing it too. We have a number of listings already in the works that are going to hit the market in July. So we're going to continue this trend of seeing more inventory on the market. And that is, of course, very welcome. Still very competitive. We're still in the red zone when it comes to sale to list ratio. So if you're not familiar with it, this is the ratio of how much people are paying on average compared to list price. Historically, that has been always around 95 and 96%. So people were able to negotiate. In the last years, we have been a lot over 100%, currently over 102%. So that means a lot of the listings are going with 5 or even 10% in the hot markets, West Allis, Wauwatosa, Whitefish Bay, up to 10% over list price. We see it all the time. But on the other hand, we have also negotiated some really fantastic deals in the last month or two with $50,000, $80,000 below list price on larger deals that have been sitting for a little while. So it always matters which one are you looking at. That's always the interesting question. Is this going to be competitive, or is this a deal where you can actually negotiate? Knowing which one it is, that's the trick here. I think the sold to list ratio will ease up a little bit next month as inventory is increasing. I think we might slip back down into the 101% range. The interest rates are also helping here a little bit, so maybe that will offset that. It's hard to say. We're not going to see a dramatic change, but at least it should not get worse. Let's take a look at prices. So median list prices, so what sellers are putting on the market. You can see here typical spring market, sellers are getting more and more ambitious. And when we look at the green curve, that is what buyers have ultimately agreed for and closed on deals. Finally, these two data lines have merged here in June, and we're ending up here at the 355,000 mentioned earlier, 6.6% higher as we were at the same time last year. Now, I got an interesting statistic here, an interesting survey from Bright that came out that is talking about 3 out of 4 buyers have stopped looking for a new home in Q4 in fall. So the surrounding conditions were a little bit tougher than they're right now. We had very, very little inventory, and interest rates were going up. If you remember, we were going towards 8%, in some cases actually over 8% mortgage rates, and that is the number one reason why a lot of people dropped out here, 67%. Then other reasons mentioned were the high prices, maybe not so much an issue here in the Midwest as it is on the East Coast and on the West Coast. Unsuccessful offers, not competing. I've heard it from other brokers that some agents are writing, or some clients are writing 7 or 8 offers before they get a house under contract. I think that is very high. So we average around 2.5 offers before we get a buyer under contract. If you have to write 7 or 8 offers and you still haven't gotten a house under contract, you're doing something wrong, or your agent is doing something wrong. Or you just couldn't find the right home. The last reason here, which is, of course, because of the low inventory. We actually had a really good first half of the year, and let me just do a little bit of self-promotion here. So together with my team, On Point Realty, in the first half of the year, we have closed 55 transactions, so 55 families that were really happy with the result. Total volume of over $21 million, and our average transaction price is $392, so just under $400,000. So we do quite a bit with very average homes, $250,000, $350,000, $450,000, but we also go up over $1 million. And so yeah, the market is down about 30%. We're actually up in market share, and we have learned from every single transaction. So if you do the math, we're closing on average about 2 deals a week. So we see a lot what's going on in the market. We see how people are negotiating, and we can take all that information and put it to work for you, all that experience. So if you're thinking about a move, let's talk. The easiest way is always to send me an email. You have my email address here, m.auerbach@kw.com. Looking forward to hearing from you. All right, let's get back to some economic data. Here I have the new data. Yesterday we got the latest reading on the consumer price index. We are down to 3.0%. Not a huge change, but you can see we are trending down here. This is the lowest reading so far. A lot of categories have improved. Housing is still stubbornly up. Rents are still going up, and we have indication that that will continue to go that way, but also mortgage equivalents are going up. So, but we have seen all other categories. Used cars is, for example, down 10%, and a lot of other categories have improved. So, of course, that was the goal of the Fed, to cool inflation down. We're seeing this. They want to get down to 2%. We're not there yet, but this is good news for the Fed, and hopefully we can see a rate drop at some point in the future. Hold that thought. I'm going to get back to this in just a minute. Before we go there, let's take a quick look at the unemployment rate. 10-year chart here. The red line is showing you the US. So we have currently an unemployment rate of 4.1%. How much is that? So anything under 5% is considered a very good job market. So we are still in a very good job market, despite what you hear sometimes on social media. When you look at the numbers, over 5% is a tough job market. We're here at 4.1 nationwide. If you look at Wisconsin specifically, that's the blue line, we are at 2.9%. We're lagging a month behind here. I don't have the latest data yet. But you can see there's quite a bit of a difference. between the national market and the Milwaukee market or the Wisconsin market. So we're doing good. So overall, we're seeing some shifts here in the economy. If this is good news or bad news depends on where you're standing, but we definitely are getting inflation more under control. What that means for the real estate market is a question that I get a lot. People asking me, is the market still good? What is it going to be for the next few months? And the chart that I have here will give you a pretty good answer. So this looks a little bit confusing. Focus on the orange line that is giving you the showing activity, how many people have looked at houses in the US in the first half of the year. You can see the dip around 4th of July, of course, not that much activity. Now we're back up. And the other lines are giving you the 4 previous years here. So we are kind of right in between what you would expect, actually a little bit stronger than the last 2 years. Now, what can we expect for the second half of the year? I think we're going to follow a very typical path here, maybe even a little bit stronger than what we have seen in 2023. So, that's the good news of it. The, bad news, if you will, is that from here on, every year we have a strong seasonality in Milwaukee. The market starts to very gradually decline. So in July and in August, it's not that really notable. But then as we're getting mid of September and October, then you can see it's really going down. And then, of course, you got the dip here at for Thanksgiving. Let's take a look at mortgage rates. What can we expect there? Slight improvement there. We're consistently below 7% now. One of my favorite lenders in Milwaukee is actually doing 6.5% on a 30-year fixed. So that's a lot better than where we used to be, almost 8% last year in fall. Question is, what can we expect for the future? We've heard a lot about mortgage rates are supposed to be dropping this year, and the Fed has been dragging their feet because the economy was just running too hot. And so the predictions were too optimistic, and now everybody's dialing it back. So the consensus for the next 4 quarters that I have here, so that goes well into 2025, we are going to remain in the 6s, maybe low 6s for next year in spring, but nobody is anticipating currently any drastic changes. But one thing has changed with the cooling of the economy. Jerome Powell, the chairman of the Fed, has addressed Congress last week, and he made a few hints. So based on that, we are seeing an update here from a lot of the financial institutions when they're expecting rates to come down. And a lot of them, I've highlighted them here for you with these red arrows, are thinking September. So you have your Barclays, Citigroup, Fannie Mae, Goldman Sachs, Morgan Stanley, UBS, Wells Fargo, that are all thinking it's going to happen in September now. We have a few that are skeptical that say in December. Deutsche Bank, Bank of America. My take on this is, yes, we will probably see rates come down a little bit this year, but it will not dramatically change the rate environment. If the Fed is changing the rate maybe by 1/8%, that signals a trend change in direction. So that's good that we start going the other way, because we've been going up, 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 up. So now we have been going sideways, and this would be the first rate cut in a really long time. So that would be a strong signal to the markets. But if you're thinking your mortgage rate or your monthly mortgage payment is going to be significantly different, that is not going to happen, at least not this year, at least not yet. You may have to wait another year or two before that is happening. So it might only be a very small change. But lower rates are always good news for the market. Let's take a look at the big picture, what's going on with prices. I have here for you in green the median home price for the Milwaukee metro area. It's a zigzag line that is our annual seasonality. So in June, we're always hitting the peak. The latest data point here is actually from May. So the June number is not in. So you can expect June to be somewhere up here, significantly over where we were last year. And then in comparison, we have the national average here on red. So Milwaukee home prices are very evenly, very steadily increasing, but we still have quite a bit of a gap to close to the national average. So this is not East Coast or West Coast prices, which are a multiple of 3, 4, 5 higher than what we have here. This is just a national average. But I think over the next years, we will probably catch up with the national average. When people ask me, are we still in a hot market? This is the picture to take a look at. So we define if we're in a hot market or not by how many months worth of inventory we have in a market. As you can see, we are still very, very deep in a seller's market, but we are moving in the right direction. Now let's go to the third question for today. What can we expect from an election year? How is that impacting the real estate market? We looked back at the last 11 presidential elections, and here I have number of home sales for you. So we're starting here in the 80s and then going down all the way to 2020. And you can see a lot of green arrows here. So almost always we have seen more homes being sold in the year after the election. So that would be a very promising sign for 2025. But that's also kind of in line with what we're expecting anyways. We have finally a little bit of inventory coming in the market. There's a lot of pent-up demand on the buyer side. So you bring these two things together, we should see more transactions next year altogether. In terms of mortgage rates, most of the time we have seen slightly lower mortgage rates. That seems to be the trend anyway, so it's not really that impacted by what's going on with the election cycle. This is more an economic cycle. So the Fed has been trying to get inflation under control. Inflation is getting better, and they have said once inflation gets better, they can ease their monetary policy, and that's why we're expecting rates to come down. So should not have too much to do. I say should because a lot of people will give you a wink and say, yeah, it's the government. All right. So what can we expect for home prices? Also here, a lot of green arrows. So most of the time you can see home prices have gone up the year after the election, historically speaking. The only exception here, 2008, of course, which was really massively driven by the subprime mortgage crisis when all these foreclosures hit the market. Didn't really have that much to do with the election cycle. So I think bottom line, we are not going to see a huge impact regardless which way the election turns out on the real estate market. That is more a personal decision. What I think we will see is that things will pause a little bit in end of October and in November because there is uncertainty, and whenever people are sensing uncertainty, they will just halt and stop and not take any action. But these sales or these transactions are not going to go away. They're just going to go on hold until we have election completed with certainty, we get a new president, and then we can move on. All right, what can we expect for the next 2 weeks for the Greater Milwaukee area? Rates will probably hover around 6.5–7%. More inventory, as I mentioned, we have more in the pipeline. There's more to come, but we also have more buyers. Remember, 3 out of 4 buyers dropped out last year in fall. And if I can tell you one thing about first-time home buyers, once they have made up their mind, many of them are in their late 30s, early 40s now. They're millennials. And they have made up their mind. Maybe they have stopped looking for a home, but they have not abandoned the decision. They will come back and eventually buy a home. It's just a matter when. Hot listings remain to continue getting multiple offers. It remains very, very competitive, especially in our hottest markets. A couple of weeks ago, I published my annual hottest markets in the Milwaukee metro area video. So if you haven't seen that, I'll put a link below. Take a look and see which ones are the 10 hottest, most competitive markets here in the Milwaukee area based on data. So more listings. If you're a seller, that means it's getting a little bit more challenging for you. It's still going to be easy to sell a house. The challenge really is to get the most amount of money. The market is relatively unforgiving here when you're making strategic mistakes bringing a house to the market. Timing is important, strategy is important. And when you're buying afterwards, you really need every dollar from the sale of your house in this competitive market. So if you're buying or selling, the time is now. Don't wait to October, don't wait to November. We have 3 months left of a really good market. If you want to talk about it, send me an email, m.auerbach@kw.com. Looking forward to hearing from you. That's all I got for you this month. I'll talk to you soon.